Traders from around the world, welcome to another real-life trading interview. My name is Jerremy Newsome, and with me, potentially a trading legend, but at least a legend in my mind, Brian. I'm allowed to have my own opinions. So I want to introduce everyone.
Jeremy, thank you.
Thanks, bro. So everyone here who's watching this already knows who Brian Shannon is. He's the CMT and the specialty founder of AlphaTrends.net. So many cool applications. You do so much, man, for the trading world and trading community. So just big first initial massive thank you for being an upstanding citizen in this really weird, interesting space.
It is weird and interesting. Thank you for giving me that title of being honorable amongst a group of sometimes shady characters out there, right?
Yeah, well, it's Wall Street, man. That's the thing, right? And people always mention that. So tell us a little bit about how you got started. I have read your Wikipedia page, but if anyone is interested, one of the few traders I've ever worked with that actually has a Wikipedia page. If you want to get really in depth, you can read that. But give us a cool overview, man. Like, how did the stock market journey begin for you?
Well, let me talk about that Wikipedia page. It was really cool. A subscriber came to me and said, I really like doing Wikipedia pages. Do you mind if I do one for you? I'm like, are you kidding me? That's great. So it was just a nice little bonus and something that's out there. So that's pretty cool. But where I really first started getting interested in the market, Jeremy, was when I was in junior high. Basically, I used to hang out with my dad on a Friday night and watch Wall Street Week with him. And I wasn't really watching it because I wanted to watch Wall Street Week. It was more about wanted to hang out with my dad, and he was watching that show. So I would hang out with him and absorb little things. And I didn't realize that it was actually training me for my eventual career. So, my very first trade was actually in silver when the Hunt brothers were trying to corner it. My first actual equities trade was in a company called LoJack, which I believe they're still around. I had mentioned my dad, hey, I heard this about the stock. I saw it on TV and it was, $5 a share. I had $500 saved up from all my jobs as a kid. And I said, I want to buy some. He says, it's $5 a share. We'll buy 1,000 shares. And if it goes down, you can lose your money. But if it goes up, you get to keep all the profits. So I didn't realize it, but I had 10-to-1 leverage. And fortunately, the stock doubled. So I think I was about 14 or 15 years old. And, I thought, why would anyone ever work a day in their life when you can be, you can make money this easily at this young age? So I was hooked immediately. And obviously, I learned and keep learning that it's just not that easy all the time. When you think you've got things mastered, you let your guard down and the rug gets pulled and you've got to, shake it off and say, what did I do wrong? What can I do better? Go back to the basics, generally speaking.
That's it, man. Now, LoJack, was that the company that plugged into the Ethernet cable in your computer?
No, not at all. It was, so this was 1984, 1985. There was no internet, right? So it was, I grew up in the Boston area, and at the time, Boston was the car theft capital of the world, they used to call it. And I had seen that, there was a show and the state police were getting the free not the transponders, but the receivers. They were going to put them on all the state police vehicles. So it was basically, a big box that you attach to the bottom of your vehicle. Today, you can do it with, whatever, just smallest things. And it was state-of-the-art technology. So they would be able to, put these in nice cars. You would call the company and say, my car was stolen. State police would get the little ping, go find it, recover the car. And, it was a great trade for me. I don't know whatever became of the company. I'm sure they're probably obsolete by now with so many other new technologies.
Yeah. That's awesome, man, to start at such a young age and to be in and have your dad help you and kind of give you a little bit of guidance. That's so cool.
Yeah.
That's fantastic. So the CMT technician that you have, that designation, how long did that take you to receive?
I think that when I signed up for the first exam, they told me it would take 2 to 3 years. And that's simply because there's a process that they say you can't take your exam until 6 months from when you first join. and then your next one 6 months later and 6 months later. So I guess, it probably took me the year and a half. I don't remember, truthfully. The first exam, I didn't really study for it. I was a little bit cocky. I went in, and it's a pass-fail thing. And I wish they timed it, or I know they timed it, but I wish they kept records of the time, because I think I got the record for it. They gave me about 3 hours to do this thing, and about 47 minutes later, I hit submit on the last button, and I was like, okay, should I go back and review these? And I said, no, I'm not going to review them. So anyways, I did pass, and then, the next two exams, though, I did have to do a lot of studying for, and a lot of learning things that, that are, to give the overall foundation of technical analysis, things that, you may or may not use on a day-to-day basis, but, at least you're exposed to the different, types of technical analysis, looking at point and figure charts, Elliott wave, and, memorizing certain candlestick pattern formations and what they might portend for the future.
Right. Do you feel like it helped you become a better trader?
That's kind of a trick question, or not a trick question, but maybe a complicated response that, it's kind of similar. I went to school for business management. And do I think that helped me become a better trader? Not really, but it helped me learn how to learn, and learn how to, write better, and do a lot of other things that we might not immediately recognize in the work that we do on a day-to-day basis. I think that it gave me a great foundation and better understanding of technical analysis as a whole. So, the short answer is yes, I do. I can't point to one thing and said, because I learned this technique, I'm a better trader. But instead, because I have this, more global vision of what technical analysis is, and it's not just how I use it, but to understand how other people use it, different time frame participants. And then I can use that and say, what is the chart telling us? The chart's telling us the story of all the participants. So if I can understand what motivates various participants in a technical way, in a way that I might not have normally seen, that gives me just a little bit of an edge, I think, over the next guy who's looking at it a little bit more one-dimensionally. So, Jeremy, I shouldn't have over-explained it so much, but the answer is definitely yes.
Cool. I know, I love that, man. It's such a great accomplishment. And speaking of writing better and having a degree in business management and also multiple time frames, right. Your book, legendary, man, game-changing technical analysis using multiple time frames. If you have not read that book, make sure to do so. It's a staple in the collection of traders who just love this thing. So when you are going through your swing trading, I know you like to use smaller time frames. Can you walk us through what an anatomy of a trade looks like for you generally?
Ideally, it's maybe 3 or 4 time frames. So what I do each day is I look at a bunch of stocks manually. I don't run scanners and tell the market what I want. Instead, I want to get a feel for the market. So I'll look at a minimum on each day about 350 stocks is my weekly list that I'm looking at. And I don't intend to trade all of those names, of course. But I have some consumer staples. I have some utilities, energy, even though I don't trade energy. I've got all the tech stocks I'm interested in, some high flyers. And I observe, the complete picture and listen to the message of the market. So if I see that there are 3 energy names that I look at them first of all. So I've got a weekly chart, a daily, 65-minute, 30-minute, 10-minute, and 2-minute. So I look at 6 different time frames. I have that on the screen behind me for each stock. And I'm not really, analyzing in depth. Instead, I'm trying to get a general feel. And if something looks like maybe, it's in a nice uptrend on the daily time frame, and it's been pulling back 3 or 4 days, and the 5-day moving average is starting to flatten out, that kind of gets my attention. It says it's in an uptrend. It's pulled back. I don't want to buy the pullback. I don't believe in buying dips because they might just keep going lower. Instead, I want to see that they start to accumulate for a period of maybe a day to 2.5 days is really the sweet spot to say that the buyers are now regaining control in there. And then I will look down to the shorter term time frames, that 30-minute, the 10-minute, and try to say, okay, here's where the key level is that I think if it makes a higher high on this shorter term time frame, we will now have a alignment of trends. So on the daily time frame, talking long, we have a stock that's making higher highs and higher lows. It's in an uptrend. Well, on the shorter term time frame, it's pulled back, so it's in a downtrend, then it turns sideways. Now I want to anticipate where that next higher high comes from on the shorter term time frame to confirm that now we have the momentum in our favor on the short term time frame, which is in alignment with that longer term time frame. So here's my ideal spot to get involved. That's, my entry. But I also want to look at it and say, okay, relative, of course, to what? My risk. What's my risk here? Well, if it makes a higher high on that short-term time frame, what would invalidate that? What would invalidate that is if it breaks below the most recent relevant higher low. So it's just simple definition of trend, Jeremy. It's
That's so cool. Yeah,
clean. It is. It's clean, and it's you don't have to be looking at all these oscillators and indicators. Now I use a couple of simple moving averages. I'll use the volume weighted average price from that most recent high to see if the buyers are truly regaining control on an average cost basis from that event, because that really gives me a little bit of extra confidence. And then I'll anchor a volume weighted average price off that recent low, and I'll use that along with traditional support and resistance to say, okay, here's where my stop goes. Now, relative to that, does it seem like I have a good opportunity to make money on the long side? And I guess my initial target, I guess, would be that it just goes and meets that prior peak. And a lot of times, so if it might take a 6-7% rally to meet that prior peak, I'll typically sell a little bit there on the so-called breakout, because I know there's breakout players buying it, but I also have a 6 or 7% advantage by buying it at the first momentum rather than waiting for it to clear that high. So that becomes somewhat of a target. And then I start to raise my stops up underneath those successive higher lows, listen to the definition of trend. And my price target in a long is simply higher. It's not an extension. It's not a prior peak. It's listen to the message of the market. I'm not smart enough to say, here's where it's going to stop, so I'm going to sell there and the stock should stop going up. I want to listen to the market. It's and then I'll start trailing it up. So if I've sold my first third on that so-called breakout, I'll then generally have a tight stop that might be, let's say if it's run 6% at the 3% level, and then the other stop maybe at the 1% level. Now I'm making those numbers up, but to emphasize a point that I want to be really aggressive about protecting profits. I'm not of the mindset that, hey, it's free money. I'm playing with house money. I see it on my balance. It's my money, and I'm going to fight tooth and nail to make sure I don't give the majority of it back.
I love that. That's a really, really cool perspective. And you mentioned stops. I spoke with our good friend a few months ago, Ophir Golib from Trade Machine, and I was asking him about market makers and stops and like market makers hunting for stops. What's your opinion on, you place a stop, are they going to hunt that stop on every trade? Some trades, never zero, one time?
I think that the market makers, that story is 10 years old. It's not the way it used to be. Market makers aren't really in there taking inventory and moving markets the way they used to. But I think there's definitely maybe more of hedge fund hunting for stops. So, people who are willing to take more and allowed to by their firms to take more risk. A lot of people say, I'll set my stop below the prior day's low. So they set it a penny below. And this happened just the other day. I set my stop generally 2 pennies below the prior low. And sometimes if that low was 45 cents, it'll come down to 44 cents and then ramp back higher. And my stop was there at 43 cents. It's crazy that they'll just go probe it by a penny to see what they can get. And if you're, that's on a lower price stock, maybe a $15 stock. If it's a $150 stock, I might put it 10 cents, 15 cents below that prior low, just to give it a little bit of extra room. But I think that the role of the market maker today is greatly over exaggerated in terms of how much power they have and how willing they are to take risks like that.
Agreed. I love that answer, man. Thank you for that.
Cool.
When you're talking about earlier, just kind of like risk, reward, breakout, things of that nature, you are also the creator of the Anchored VWAP. You kind of like sprinkle that in there as one of the indicators that you use. And I love that that's part of TrendSpider and now TradingView and a lot of very popular charting softwares. How did you think of that?
Here's the thing. Let me clarify, because I didn't invent it. And I don't want people to say, hey, Brian stole that, because I didn't. A long time ago, 20 plus years ago, I was trading on a platform called Realtick. And Realtick had a volume weighted average price. You could look at it as a trend tool, where you would start your trend tool at the beginning of whatever date and drag it straight across like you would a normal trend line. But I noticed that this thing would go up and down. I was like, what is going on here? And I would notice that it would bounce from that at certain points. So I looked more into it, and the volume weighted average price, was actually started in 1988 as a benchmark for institutional traders. I had first seen it, like I said, about 20 years ago on Realtick. And Realtick at that time only had it as that horizontal line. Now, fast forward or back up from here about 6 years ago, I was talking to the people at TC2000, and they said, we want you to use our software. What can we do to get you there? I said, well, you have the volume weighted average price, which is for one day, which is how it was traditionally looked at. I said, if you could create a way where I can anchor it from any point on the chart and have it dynamically move forward from there, then it's a deal. So they did. They called it the Alpha Trends Anchored VWAP. The people at TrendSpider also call it, Anchored VWAP by Alpha Trends. I didn't invent it, but I kind of brought it back from the dead and breathed new life into it, and have been, the primary, cheerleader for it over the last, especially the last 8 years, I'd say.
Yeah, I would agree. I know that's one of your main tools that you use. Earlier, you mentioned stock prices, about using the 1 penny below or 2 pennies below if it's a little bit of a less expensive stock. Are there specific stock prices that you do look at or that you care about, or is it really open for anything? You'll trade anything from Chipotle to Maxar Technologies.
I think, my upper end is generally about a $500 stock. In fact, I got in one today, Broadcom, AVGO. That's about as high as I go, because it's a weird psychology thing. I start feeling like a piker because I have such small shares. It's totally just weird personal psychology there. But I'll trade $1-2 stocks if there's a hot little momentum group that's going, and I can identify a real low risk idea and try to be there before the crowd, because I know they're buying the Bitcoin stocks. So, I've got this list of Bitcoin stocks, and Bitcoin's hot. Let's, start looking at these, try and get in front of those waves. I'll do that as well. So pretty much anything's open, Jeremy.
Killer. Okay. That's awesome, man. If you had advice to give to someone, or just a direction, let's say someone had a $30,000 account and they want to trade for a living, what would your thoughts be on that?
Slow down. The market will be there. In order to make a living trading with a $30,000 account, you're going to live in absolute extreme poverty. Because, what if your first month you lose $3,000, 10%? Well, now you got to get, 13% the next month just to get to break even. I think that, a big problem, a big issue is a lot of people, they want to be the trader. It's a sexy job. It's work for yourself. It's don't have a boss, trade in my underwear, and all the stuff that the charlatans, really capture, that try to get people with $30,000 accounts to get involved in a full-time basis. I'd say just slow down, go back to what you're doing, whatever your job is, your boss most likely doesn't care about you. So, do as much work as you have to do to be a good employee, but trade on your mobile device, set a lot of alerts, take advantage of your employer because in some way they're taking advantage of you, but think about yourself in that role. It's, you've got to pay your mortgage or your rent. You've got to pay your health insurance. Or God forbid you just say, hey, times are tight. I'm not going to pay my health insurance. It's the wrong attitude. Make sure your financial house is in order and you have a much bigger base and a consistent track record of profitability before you decide to go full time. It's not an easy job. This market has helped create a lot of bad habits, I think, for people the last year and a half since going straight up off of that March low. Buying the dip and stocks that shouldn't recover continue to recover, or buying stocks in downtrends that they get that bounce. And really, if we were in a prolonged bear market, there's going to be a lot of people suffering really badly. So, make sure you've traded through a full cycle with more significant capital as well. And again, just, get that paycheck if you can, and always have the goal of setting as much of that aside and growing your account through capital contributions, be it in your IRA, your Roth IRA, whatever it is. But, just slow down. The market will be there.
Pro move, pro answer. Love it. The market will be there. You mentioned some stocks that are recovering and shouldn't. Do you have any thoughts on which ones are just garbage and why are they still going higher?
Well, we just saw another round of selling in the Chinese names, and a lot of these stocks have been in horrific downtrends. And then, they get these bounces of 10, 15%. And then people all, chase into them. And, but the moving averages are still heading lower. You could look at any stock in a downtrend that's had this 10, 15% bounce. And then, they just kind of fizzle out after that. If you're going to trade them, recognize you're trading a bounce within a downtrend. Don't get all excited about the story that was. The market is a discounting mechanism. It discounts the past. It's about what's in the future. If the stock's in a downtrend, it's in a downtrend for a reason. Bigger money, more informed money is looking and saying, we don't like the future for this company as much, so we're selling our stock. And when it rallies 10, 15%, we're going to try to sell as much of this as we can because we don't want it on our books. We're trapped in this thing. If they don't scare you out, they will generally wear you out of those longer term declining stocks.
Yep, that's so true. I like how you're bringing the big money, the huge money into this discussion a lot. I think that's very valuable because a lot of people do always forget that the amount of money in the U.S. market is astronomical. And
really?
there are other people on the side of that fence. And so if it's in a power downtrend, it's probably not cheap, right? It can get cheaper, like a Blue Apron. Man, that thing, I did try to call the bottom on that one twice, both unsuccessful both times. And then I got the product.
We've all done it, Jeremy. I've got my Blue Apron stories as well. No one's immune to it. But just, and the key is, this, you recognize it, and the first time you probably lost a little, and the second time you probably lost less because you're telling yourself, what am I doing? I know better than this. Hello, remember what happened last time. Why do you think you're smarter than the rest of the market again? And we all do it.
All do it, man. We all do it. Brian, do you ever trade options or just stock?
No, I do. I do options. And I'm just a premium buyer. I don't do any complicated, straddles, strangles, butterflies, any of that stuff. To me, when I use options, I use them to actually control risk where I think the stock might be too risky. Let's say, for instance, I like this stock and their main competitor is reporting next week. Well, if I want to hold this thing for 2 weeks or so, or even this week, I might say, I like it over the next few days, but their competitor reports tomorrow. So if I buy the stock and they're correlated strongly with this competitor, I can either, buy less shares, or I can risk a smaller amount of capital, and I know that I'm going to lose that entire amount if it declines, and I'm okay with that. I can absolutely define it. But if the stock gaps down 20%, also the only loss I'll have is my premium, versus if I buy that stock in a normal size position, I might get the shit kicked out of me in that trade.
Yeah. Yep. That's a really good point about just protecting yourself, especially with like competitors reporting earnings. They could crush it. Stock goes down instead. You mentioned sometimes you're in trades for a couple of weeks. What is your average period of time that you're in a trade, Brian?
The average is probably 2 to 3 days. I don't consider myself a day trader. Most of the day trades I do would be, hey, I'm sitting here, I see an opportunity, I'll take advantage of it, or they're losers. So the majority of my day trades are losing trades that were intended to be a swing trade, but I got stopped out. So, I want to hold as long as possible, but it's not up to me all the time. It's up to the market. I've got to listen to the market. I can't say, hey, I want to just sell my stock in 10 days at this price. I'm going to set my, price target and my date and sell it there. Instead, it's about active management and listening to the messages of that stock in the market and how long will it allow me to. So on the high end, maybe 3 weeks is about what the stocks will allow, at least for that final third. So the final third, I typically sell in thirds, as I've kind of alluded to. That final third, I give a wider stop to, and I try to hold that one for maybe several weeks. And I'm often really surprised at how big that profit can be on that just final, what seemed like an insignificant, a third of a piece, how big that profit can be. So it's up to the market, but generally speaking, the average, including, the ones that get stopped out for day trade losses, is 2 to 3 days.
I've heard that a lot. That's what Gene Munster told me a few weeks ago when we chatted. He was like, yeah, man, just sometimes hold on to a third or a fourth or even a 10th. My buddy Joel Alconin, he's kind of the one that told me just scale out rather than get out of everything. If it's a swing trade over multiple days, because it could gap up overnight. Do you ever exit any of your positions in the extra, post-market, pre-market?
Yeah, and that's generally the only time I get involved in pre and post-market trading is to liquidate something.
Yeah.
And usually, and by that I mean I won't panic and liquidate a stock that it closed flat and it's dropping after hours a little bit. Instead, the next morning I bought a stock at 23. Here it is, it closed at 24. It's gapping up to 27. I'm almost always going to feed some out into that optimism, because a lot of times, the pre-market is the emotional traders who can't wait, and you want to provide the liquidity to them. But again, if that is the case, I'll do a piece, because because sometimes you see they gap up and they're great in the pre-market and they just run all day. So I'll sell pieces into a gap up, pre-market, that sort of thing.
Yeah, brother, what's the worst trade and best trade that you've done in the last 12 months?
Okay, worst trade. Here's the thing, Jeremy, is I write down all my trades and I don't really remember them. I don't. Okay, so best trade.
It's probably a great thing, bro, because I remember immediately. They're all pretty bad. No.
Well, I haven't had any real bad losers. I remember there was one that I did get blindsided by on a gap down, and it was down about 20%. And I had about a third of my account into it, and I honestly don't remember. So it was about a 6% equity drawdown, which is, for me, just a huge hit. And I wish I could remember the name of it, but I don't. And I think that the biggest winner was probably, going back to some of those, like I was just talking about the last time the Bitcoin stocks ran, I was involved in this stock called CAN, C-A-N, And if I could look the chart up and tell you, but I owned it at maybe 3 and, held some as high as 23 or so. And over the course of, a week and a half. I mean, it was just one of those crazy types of moves.
Yeah, looking at it right now. That was that January to mid-February pump that got everyone so excited about this market. That was crazy.
And there were numerous stocks like that. So it actually, so it went to 35, 36. I was out on that first leg in February, just looking at the chart right now.
You didn't sell the exact high?
No, prior to the March move, where it went from 20 to 40, I had already been out.
Incredible. Yeah, that's cool, man. That's really great. I think that a lot of traders get stressed out about, like I said, selling too early. And one of my sayings is, bro, you will literally always sell too early. Like always. Like it'll always go higher than when you sold it. How do you overcome FOMO, Brian?
I trust my process. I trust that I can be patient, wait for the next opportunity to come. Of course, it's annoying to see a stock, you sold it at 23 and then a week and a half later it's 40 and you're thinking, wow, boy, was I a dummy. No, I wasn't a dummy. I went from 3 to 23. That's a hero trade in my book. And I'm not looking to be the guy that sells the high. If you're looking to be the guy that sells the high or buys the low, you're going to be, just constantly chasing your tail. If you have a process and you get stopped out and you held it for a long time, congratulate yourself. Don't beat yourself up. You did a good thing. There is no perfection in the market. If you have a process that you trust and you have a strategy that you can repeat, just wait on the sidelines and wait for those opportunities to present themselves again. We want to be involved all the time and we want to be the hero trader, but you know what? I've tried that and I've learned the hard way over the years. I've been doing this, Jerremy, since 1991 full time after college, that I'm not that guy. I'm not the guy who can consistently make the home run trades. I'm comfortable with what I do and what my strategy allows me. And sometimes on that final third, I get really monster moves. But it's about having a repeatable process and trusting your process and your discipline to implement it.
I love that, brother. Do you have like weekly, monthly, quarterly, yearly goals for your trading, or is it just kind of whatever comes happens?
Yeah, it's kind of more whatever comes happens. It's more about just, again, staying true to my process, trying to avoid, the dumb mistakes. It's always the dumb mistake. Oh, I knew I shouldn't have done that, where your biggest losers come from. If I can protect myself from those and try to maximize what the market allows me to get, then I'm pleased with my results. But if I put an arbitrary number that I have to make X percent or X dollars amount each day, month, or week, I'm going to be continually depressed because I didn't hit it yesterday. And in fact, I was down yesterday. Now I have to make twice as much up. So I don't, that process, that style has never worked for me personally. To me, it's more about, am I seeing the market clearly? Am I not making the dumb mistakes? And am I staying true to my process? If I can do those, I know that the results will be better than what the market is giving most people.
How do you know if you're not seeing the market correctly?
Yeah, I'll start making some emotional decisions and trying to just get involved because I feel like, so sometimes a little bit of that FOMO does creep in and I'll make those mistakes. But the good news is that I've become a lot better at recognizing when I get into that state of mind, and I can cut it much more rapidly. Whereas in the past, going back 10, 15, even 10 years ago, there would be once or twice a year, I would look at a stock and say, hey, that's down too much. This is clearly the low because it's this retracement, it's that moving average, it's this VWAP. I'm buying 500 shares. It's not a lot. It goes down another point. Well, I'm not going to sell it because I'm so close to the low. This has got to be the low. I'll buy 1,000 here and then buy another 1,000. And then I have this monster position with my biggest loss of the year. And I would do that, once or twice a year. Fortunately, that demon I have mastered, knock on wood. And so it's about just recognizing when you're in that state and saying, remember how bad it gets when you're trying to fight back from those big losers. And it can take 2, 3, 4 months to get out of that hole that you dug in one day by being stupid. And again, you're always going to go back and say, that was a dumb mistake. I knew I shouldn't have done that.
Do you implement any kind of pain, or do you like go work out in the gym for 9 hours if that happens? What do you do to try to prevent it from reoccurring? Because you mentioned you mastered that demon, which, bro, so proud of you. It's incredible. That's an accomplishment for sure.
It is.
What do you do when you're like, oh shoot, I've gone too far, I've made a stupid mistake? What's after that?
I've gone for a long bike ride. I've drank too much. I've tried every strategy there is. I would say a long bike ride is healthier than drink too much. I've gone and curled up in a corner and chastised myself and, take a week off of trading. Because if you go back the next day, you're going to the money just doesn't seem the same anymore. You're like, well, I lost this much. So, wow, cool. I made $500 on that trade. That's nothing. And then you piss that away, and then you're down 1,000 that day and 5,000, and you've got to just kind of reset your mind. And it for me, the reflecting back, it's probably just been, you got to take some time to process it through. Maybe take a week off, and that's a arbitrary number, but take some time away from the market, just observe. Don't beat yourself up for not taking that trade you knew you should have, but just say, I'm recovering from a wound here, and I need time to heal. I need time to reset my brain and let it just, come back to me on a natural way. And I have to, I have to be careful of myself while I'm in this condition.
Yes. Healing from a wound. I like that. Because it's true, right?
Financial wound is real.
It's real, bro. I forget the author. Would you rather be eaten alive by piranhas or a shark? It's like you're still eaten alive. So get out the water. Yeah. Shark. But yeah, get out the water.
Boom.
I'm dead.
And that's the way it is with losers. Is do you add to them, or do you wait, or do you do this? Rip the Band-Aid, take the hairs, let the shark cut my head off. I don't want to prolong it and be festering and feeling all this pain while these piranhas keep nibbling on me.
Do you have 2 books that were revolutionary in your trading? Like yours was for mine?
Yeah. The very first technical analysis book I read was John Murphy. What is the name of it? It's John Murphy's book, Technical Analysis Explained or something like that. And then Stan Weinstein's book, Secret for Profiting in Bull and Bear Markets. That was actually the number one. And then maybe William Giler, his book was How to Profit from Chart Patterns, I think. And that kind of explained the psychology of, trying to understand the psychology of other participants and how it comes together to form those chart patterns. Versus Stan Weinstein's was the classic stage analysis. And man, when I read that book, I remember exactly where I read it on a plane to Alaska in 1992, and it just blew my mind how clear and simple it made the market.
That's so cool. Okay. I have not read that one. I'm getting it right now.
Yeah, get on it.
I'm getting it right now. Last question for you, my dear friend. Do you ever, well, obviously, how often do you pull out money from your trading accounts?
I don't pull a lot of money out of my account. I pull money out of my Bitcoin account.
That's fair.
And I put it into my equities account.
I like it.
So I'm at the stage of life, I'm 53 years old, where I don't need to pull money out of my account. I just want to see them grow. Unless there's, an investment that I'm interested in, then I'll pull money out for that. But I do have multiple streams of income, as I know is important to you, and it should be for anyone. So I'm fortunate in that regard. And, but when it comes to Bitcoin, I hit a number in that account, and I said, that's all the money I'm comfortable having exposed. I've taken all of my capital out of Bitcoin years ago, my original capital, and now I keep it at a certain level. And on a monthly basis, if it gets above that number, I pull that out and I put it back into my equities account, or I make an IRA contribution into my SEP. So because I just don't trust it. I don't know what it is still. I really don't. But it's been great to trade. I don't understand why it continues to go up, and I don't believe it's going to be the new currency. I basically am ignorant about it besides trading, and I prefer it that way.
Cool. Yeah. Well, hey, congrats, man. I'm glad you won on it. That's amazing. I know a lot of people have not, but I too am in crypto pretty heavy, and
good.
Yeah, multiple streams of income. That's the message of the whole class, the whole webinar, the whole interview. Get as much as you can, guys.
Jeremy, I love money, and money loves me.
That's it, baby. My man. I love it, dude. Brian, thanks so much for being here. I really appreciate your time.
Yeah.
Yeah, absolutely. My absolute pleasure. It's been an honor, and man, I'm sure we'll keep connected in Twitter, and I'll keep messaging. I'll send you this interview after it's all said and done.
Fantastic. Look forward to it.
Me and you're going to keep communicating, man. We got a lot of big things we got to do together, man.
All right. Sounds good.
All right. See you, brother.
Okay. Take care.